Hi everybody, this is Dan from ThetaTrend. This is just a quick video. I wanted to sort of run through some positions that I have open in one of my accounts. These are all small positions, they're one contract each, and it's just to kind of give you an overview of what it looks like to trade a diversified group of markets. What we're looking at right here is the IWM, which is the Russell 2000, so basically US stocks, and this is the ETF that I choose to trade. Price yesterday closed up here at about 90.08, and this is February 6th in the morning, about an hour and 15 minutes before the market opens at 6:18 a.m. I'm in Mountain Time. So let's hop over to the Analyze tab, and actually before that, this level right here, the 87.74, if my price trend indicator was showing, this would be the level at which we'd say, you know, the trend has reversed, or at least it's stopped, and we want to be out of our long positions. And you know, the indicator does move up with the trend. It didn't start up here at 87.74. It started down here, and over time it moved up and it moved up and it moved up. And so we just sort of follow the market and follow the trend. But so let's remember that level, 87.74. So this is the Russell position that I have open. And as you can see here, I'm short the 84.82 vertical spread. And price is up here at 89.60 this morning, and the level that we were looking at was 87.74. So even if price goes down to that level and we have to close out the trade, I mean, it looks like we're going to take a little bit of money off the table. You know, it shows an open profit there of 19.32. Say we get 10 or 15 bucks out of it, you know, not a big deal, but you know, over time it adds up. Let's just take a look at another market here. Let's take a look at bonds, and I like to trade the long bond, the TLT. And you know, as you can see here, bonds sort of chopped around and then they broke down here. We're down, you know, we're about 116 or so, and our stop level here is 119.86. So if we hop over and we look at bonds, so now you can see sort of the opposite position. You know, price is 116.45 before the open. We have an open profit yesterday of about 35 bucks out of an initial credit of 50. And that level, what was that level again? 119.86. So if price hops to that 119.86 level, which is basically there, you know, we're going to scratch on this trade. It's not the end of the world. But that's just sort of the way I look at things. It's an objective, you know, an objective view, and that's only if it happens today. Is price going to go from 116 to 119 today? You know, I don't know. It could. Sometimes the market does crazy things, and you just don't know what's going to happen. Let's look at the USO. USO is oil. Basically, it's an ETF for oil. And our stop level in this case is about 34.13 rather. Sorry, and price here is at 35. So let's hop back over here and look at the USO position that's open. So right now the market's trading 34.47. We have an open profit of around $30 in this trade. The initial credit's 45. And it looks like I'm short the 32.50 and long the 30.50. So there's an open profit here. And if price comes down again, you know, we're still okay. It's not the end of the world. We'd like to move all the way up here and take more of the profit, but if that doesn't happen, you know, time will click along, and over time the curve moves up and it helps us out. But you know, we just don't know what's going to happen, so we're going to just manage the risk in each individual trade and you know, sort of hope for the best. Let's hop back over here and take a look at UNG. So UNG is natural gas. We got a nice pop-up yesterday that helped our position. We're long, and our stop level here is 18.20. So here, if price falls down to 18.20, you know, we're going to take a little bit of a loss on that trade if it, you know, if it happens today. Right now we have an open profit of you know, around $18 or $19, say. And I should also say all of these trades were sort of put on within the last 2 weeks, And so what happens is over time price decays, you know, and this break-even point moves back and back and back. until the white line becomes the red line at expiration. The white line is what our position, profit and loss is today, and right now we have a little bit of a profit. Let's hop over here and let's take a look at silver. So silver, we're also long silver, and it looks like the stop level that we have right now is about 25.55. So we go back over to the Analyze page, we can look at the silver position. And it looks like price is at 30.75, and again we have the a little bit of an open profit in this position. I can delete this simulated trade, it shouldn't be in here, but we're short the 29, so basically we're short down at this level here. So we have a little ways to go before this spread would even go in the money, but this is the level where I'd say trend has reversed and it's time to get out. Let's look now at gold, and it's sort of interesting. We have a short gold trade on, but a long silver trade. It isn't really what you'd expect, but it's just the way that the trend indicator works out, and so if it tells me to do that, that's what I do. It's not rocket science. So this is 163.90 is our stop level, and if we hop back over here, we can take a look at the gold trade. And it looks like the gold trade's taking a little bit of heat. It's down a couple of dollars, $3 or something like that. And if it does pop to this level, we'll take a little bit of a loss on the trade. $20 versus the credit of $43. Not the end of the world again. It's just sort of looking at all of the winning trades that you have and saying, can these winning trades pay for the losing trade if I have a losing trade? I think there's another position in here as well in EEM, which is sort of like international stocks. And our stop level here is 43.47. So let's hop back over here and just take a peek at EEM. And so it looks like there's a little bit of an open profit in this position as well. Maybe I can stretch this out and we can see it better. But it looks like we're short the 43 and long the 41 vertical, and there's a little bit of an open profit here of just under $10. But the idea I wanted you to take away from this is that I trade a large number of markets, and all of the markets are uncorrelated. And the reason I do that is that some of the markets will have winning positions and some of them are going to have losing positions, and you don't really know what's going to happen in any one month. And over time, it helps to smooth out the returns. I'll pop over here to the monitor page for you real quickly. And I do have some underlyings in here as well, different ETFs that I trade. But the idea is that I have a lot of open positions on at any one time. I'm never just trading one thing. And the reason I do that is it smooths out my returns, and it makes me a more profitable trader if I do that and manage my risk. So I hope this video was good and helpful, and as always, shoot me an email on the contact me page or info@thetatrend.com. Thanks.